Okay, hi. So good morning, everyone. Welcome to the new week. This is the macro snapshot. It is Monday, June the 17th, 2024. Just for the record, recording this about 7 a.m. on the Monday morning. Okay, guys, not a huge amount going on. To be absolutely honest, if we just look and look at the sort of what's on the calendar for today, the main things this week, I would say there's some central bank meetings. We have the Reserve Bank of Australia this evening at about midnight, actually about 12:30 or so. And then we have the Swiss National Bank early on Thursday morning, followed by the BOE. So interesting to see whether some of those banks will not sort of cut. First of all, just for the Reserve Bank of Australia, if we actually just look here and see what's sort of currently priced in by the market, which I'll just do in a second. I'll just bring up the function here. So WIRP, sorry, I should have done that a bit earlier. Here we go. So let's just see what's priced in. You can see what's priced in. The market only pricing in 8 basis points out of a possible 25 basis point cut. So essentially, the market only pricing in at the moment, maybe about a 30% chance of a cut. So that would be a major surprise if they were to cut. They're expected to stay on hold. Keep in mind they have another meeting in August and another one in September. And so the first sort of real cut, it's not really priced in until February. So the basic narrative here for the Reserve Bank of Australia is that the economy is still a bit overheated. Inflation is still strong for the liking of the bank. So just keep in mind that the first cut is not priced in, as I say, way after the Fed, or obviously the ECB and the Bank of Canada, for example, have already started cutting. So at some point, what's going to be interesting is to see whether the rhetoric from the governor is actually sort of softened a little bit, because at this point, still probably amongst the developed banks, central banks, the most hawkish ones. So here, very little chance here of a cut. What we'll be looking for in the statement I'll be looking at is just the sense of whether inflation is actually coming down a little bit, whether the Reserve Bank is sort of happy with that or not at all, and whether they want to maintain this hawkish bias. So that's happening there. Apart from that, in the US, we don't have too much data anywhere. What we do have is Empire Manufacturing at 8:30. To be honest, that's second tier. Really, what the market's going to be interested in this week is the retail sales happening tomorrow morning. And just because the market wants to see whether this narrative of a strong US consumer is continuing, and the logic here is that, if the labor market stays strong, if the US consumer stays strong, then the Fed doesn't really need to be in any particular sort of hurry to cut. But more than that, I think really what the market's coming around to is this idea that, what the Fed says in the dot plot, or the speakers, or the speeches, or the forward guidance, the Fed has made it very clear, Powell made it very, very clear that they are data dependent. And I think really the market will move completely on the data. And it's almost a sense now that the Fed will follow the market and the market will follow the data. So we have this sort of three-part thing where we have data, the market will move, and the Fed will adjust their messaging depending on the market moves and the data. So I think at this point today, we do have a few speakers from the Fed. We have Harker, we have Cook, maybe even Williams, but I think the Fed knows what they're going to say. They're going to say that they're in a reasonable place, but they want more data, et cetera, et cetera. So I think at this point, the markets will probably mainly be range bound. There'll be range trading. There'll be some sort of celebration of Juneteenth on Wednesday as well. So not full liquidity. So the point is, I think really this week it's all about sort of picking ranges, over extensions, oversolds, that kind of thing, and trading it. The one thing which I will be looking out for, apart from the central banks, is Europe. And it's just kind of interesting. We just got some comments from, I'll bring up a few charts here, just see what's going on. So I just put together a little sort of watch list here, which I've called a Macron, just to see where we're at. So if you look at the French bonds here, this is the, not the yield, this is the pricing for the OATs. You can see that they gap down on the on that election news. But ever since then, they're sort of just been trading in a range. And what you can see here is that they are basically they're trying to go back into that range where they gap down. They were rejected down here, and if you put that onto the yield, you can see that really where I had that marked, that overhead yield about 3.25 is pretty much looks to be where the market says, okay, that's enough for today. And as you guys can see over the last 3 or 4 trading sessions, the yields actually have come in a little bit, come down a little bit. And we can see that if we look at the spread here, over the French 10-year compared to the German 10-year, you can see that very critical spread level of about 80 points in favor of the French, which goes all the way back to the 2017 election scares and Frexit and everything like that. You can see that just overnight it's come in a little bit, but still, I mean, is this something which is tradable? It's a bit tricky because if there is any sort of sense that one of the extremist parties will be getting in and there'll be a lack of fiscal discipline, this could go quite a lot higher. Who knows, another 20, 40, 50, 60 basis points. And I think realistically, until we get some very strong opinion polls, which are very clearly saying that the centrist parties will be re-elected, or maybe even not until we get the first round of the elections, I think the market's going to remain a little bit nervous, and I think it's going to be difficult for this spread to come down significantly, certainly down to, let's say, like the 50 basis points levels. So that's something to be looking out for there. The other thing to be looking out for, just look at the Italian spreads. You can see the Italian spreads also come down a little bit. The CAC 40 has it actually opened for the day? Yeah, I mean that's just sort of stabilizing at lows, although it has sold off, 6, 7, 8%. So no surprises there that the CAC 40 has sold off, but just sort of stabilizing at the moment. And then another one I want to look at here is the ETF, the EWQ on the US markets, which basically tracks the CAC 40. And as you guys can see, that's been gapping down. You can see it's gapped down over the last 4 or 5 days, almost any day. So it looks like an attractive entry level here, around about the fib retracement, 61.8 fib retracement. So for sure, I'm looking at this level around about $37, 37.06. But again, it's a little bit like the spreads over the German Bund. Any whiff of bad news or any, sort of opinion polls which look as though, maybe the extreme left or the extreme right will get into the power, it's going to be hard for this to bounce. That's not to say it cannot bounce, but I think really it's possibly going to be sort of trading in this sort of, $37 to $36 range until and unless we get a clear signal that the centrist parties have the upper hand. So I think, but definitely that's something to be looking at. And for sure, if Macron's centrist party gets a sort of a strong victory in the first rounds, I think there will be a bounce there, not only in that, but also in the French bonds. Just another one to be looking at here is just the spread here in the 2s and 5s in Germany. But that's more of a monetary policy thing there. So that's just my little watch list there. And what I would say this morning is that we had, sorry, I'll just grab some tea here. Apologies for that. We just had over the wires about an hour ago the chief economist of the ECB, Philip Lane from Ireland, and he was essentially making the point that no one's panicking yet. We had a sources story from the ECB, which was coming out, a while ago as well, essentially saying that the ECB at this point has no plans to buy French bonds. They don't regard it as a full-on crisis at this point. Their preferred scenario, apparently, according to the sources story, is to wait until the elections happen and to deal with the new government. So they don't want to be seen to be preempting things. They don't want to be seen to be going into panic mode. And seem to be, relatively calm at the moment, although watching the situation. And just I thought the comments from Elaine were interesting. He said, and I'm quoting this, he said, it's not at this point a disorderly dynamic. They don't want a disorderly dynamic. He doesn't think that's what it is at the moment. And he said that a disorderly dynamic is not equal to, it's not the same thing as a repricing of fundamentals. So it looks at the moment as though the ECB, in the form of the sources story and in the form of the chief economist Lane, is just saying, listen, it's a repricing. Sure, we get it. We're looking at it, but it's a repricing of fundamentals, and it's nothing disorderly or unwarranted. And that certainly we're quite a long way away at this point from invoking the TPI, the Transmission Protection Instrument, which is essentially a way of the ECB buying bonds on the periphery. So we're not there yet. Now, the market seems to have quite liked that. If we put this here on a, I don't know, like a 15-minute chart here, this is the French bonds. You can see that it's pretty calm. There was even a little bit of a pop earlier, just because we also had a story that Marine Le Pen, who is the titular head of the right-wing coalition, basically saying that she didn't want to do anything extreme. If they did get a majority, she would be happy to work with Macron over the next couple, 2 or 3 years of the presidential term. So I think what we're going to see going into the first round is Le Pen and probably those on the left as well, making very conciliatory noises and essentially saying that they're going to be the adults in the room. They're not going to do anything crazy. So as long as we get that, you have to think that maybe the OATs are going to be relatively stable. I don't know if they're going to sort of rally enormously, but again, we have to be it's going to be choppy because any opinion polls which which show a strong potential performance by either the left-wing coalition or Le Pen's right-wing party would possibly spook the markets a little bit. So definitely something to be looking out for there over the next week or two. In terms of the other markets, not a huge amount of activity overnight. I'll just put it back on the regular stuff here. So if we look, we see that, VIX, let's put it on going back to a daily chart here. We see that VIX, is still pretty low at the end of the day in the 12s and 13s. We see that the ES overnight not really doing much. Essentially, the last couple of days, just sort of trading here at the high. So nothing weak, absolutely zero technical damage. This is still an incredibly bullish chart. Similar situation here for the NASDAQ. NASDAQ a little bit stronger. You can see up 16 basis points compared to the ES. And still this idea of the Russell underperforming. So I think really where we're at is this idea that if there is going to be any sort of positive inflow, it's probably going to go to big tech in the US. We saw a strong performance from Broadcom, obviously from Apple, from Nvidia, all of these Meta, all of these companies doing pretty well last week. And again, just keep an eye here that the Russell, the small caps and the equal weights are underperforming. So if anything, that looks to be key. And just by the way, guys, we do have a very key sort of Fibonacci level here on the Russell. If you go from this first earlier up impulse on 19th of April, you can see here around about the 1997. I mean, it's close enough to 2000 as kind of a so-called psychological mark here. So it's going to be interesting if that breaks down. I don't know, let's say Empire or something, or some kind of comments from the Fed. If that breaks down, to be honest, there's a chance it could want to retest down this triple bottom down here towards 1911. So I think anything, if you want to be short equities in any shape or form, maybe the Russell's the one. If you want to be long, probably go with what's been working, which is the big tech, global big tech. In terms of other markets, let's just have a look over at Europe. Again, this is the Euro stocks, which is a little bit old economy here. It's kind of like the top 50. So not exactly the French market. Again, trading a little heavy, but definitely stabilizing. One thing I will be looking at here, if you look at the US, the bonds, again, not a huge amount of energy, just pretty stable overnight. Oil, if we have a look at that, again, just taking a bit of a pause. This looks to me as though possibly if we look on a 4-hour chart, that it may be some kind of flagging formation here, or at least sideways consolidation here. So bulls the bulls have done fairly well. They pushed it above that short-term fib, which you see here is this sort of orangey, yellowy box. That was the 38, the 50, and the 61.8. They pushed it above that, just consolidating now before they push above the longer-term fib. Interesting, bit of a key level here. This is the 61.8% fib retracement on the short-term one. I think the bulls would quite possibly want to keep it higher than this 77.50-ish level. But if they can kind of consolidate sideways here for a little bit, not get too much bad news, then maybe they want to push higher. But what could be a problem though is China. We saw overnight that we had talking about China. Industrial output was a little bit lower than expected in China. Retail sales was, reasonable and higher than expected, but the industrial output was definitely lower than expected, and maybe that's just causing a little bit of softness in the oil and energy complex this morning. And the fact that the Chinese industrial output wasn't great was also not great for, let's say, like the Aussie dollar. If we can bring that here, the Antipodean currency. So the Aussie down over the last 3 trading sessions and overnight down a little bit as well, along with the Kiwi down a little bit. So, the Antipodeans down a little bit, maybe on that softness in China and just sort of a general lack of energy in the markets. So that's about it, guys. The final thing I just want to talk about, though, is Bill Gates out over the weekend, essentially saying that he's going to be investing at least a minimum of $1 billion of his own money in a smaller new generation nuclear reactor. I think it was in was it Wyoming? I'd have to, oh, sorry, I forgot. I think it was in Wyoming. But the point is that that could be symbolically this idea that there's a new generation of nuclear reactors which are starting to come online, starting to get a little bit of support from the US government. The regulatory process is still difficult and slow, but seems to be sort of making some progress. So the point is that in the nuclear energy space, we saw last week, I think it was 5 or 6 new reactors approved by the French government. We had, a symbolic, well, not symbolic, over $1 billion investment by Bill Gates, which will get the headlines in the nuclear sort of reactor area. So I think there is very slowly this idea that, the new generation of smaller, more efficient, safer, we hope, nuclear reactors is gaining some traction. And, for people involved in that space, if we go to, let me just put it on my, I think, whoops, sorry. Sorry. If I go to resources in the uranium space, it just could be interesting. For example, the URA, the global ex-uranium, it's sold off quite a lot. There'll be an attractive entry point, or Cameco, the Canadian company has sold off a bit, but that could be an attractive entry point as well. So just interesting to look at uranium and, sort of nuclear, just the nuclear space is something I'll be trying to have a bit of a look at this week as well. Okay, guys, so not a lot going on this morning. Let's have a look at Empire, do some preparation for the Reserve Bank of Australia later on this evening. And that's about it. We'll be in touch again soon, no doubt. Thank you and have a great day.